Is anybody here? I think it's a different link maybe. Can you guys hear me? All right, can you guys hear me and see me now? Okay, cool. Sorry about that. Listen, I am not tech savvy. I'm super experienced in options trading and I want to help you guys, but I suck at technology, clearly. So today I cannot do a real account because it was showing all my personal data, and as you can, I'm sure, understand, obviously I'm not going to do it that way. So I will figure it out. I'm gonna show this paper trade, and we're going to walk through trades, and we're still going to do Q&A, and we're going to do all that cool stuff. And then next Monday, we're going to start with a real account. Okay, so let's get started. Let's see. So you guys can see me. Let me know some questions. The old chat deleted, so this is a new chat. And I'm not even sure how many people are on here, but Nina, you can check and you can tell 23. Okay, cool. 27 going up by the moment. So I have this paper account, and we're going to look at the stuff that we were already talking about and from a couple of weeks prior, and then we're going to look at some new stuff, and I'm going to answer all of your questions because, as I said before, when I opened this live stream, my intention is that I want you guys to learn, and I want you guys to live amazing lifestyles by selling options and creating income for yourself on a regular basis. And I'm good at that. I'm just not good at the technology part. So, so let's just jump right in. We were talking about MicroStrategy and IBIT. Let's look at MicroStrategy for a minute. That has come down significantly. So if we, I think you guys can all see my screen, and let me know in the chat if you can't. And we can also, based on one of these other questions, we can look at TQQQ as well. We can talk about any ticker that you guys want to talk about. And we're going to go no later than 1 hour. So we're going to go for 1 hour today until 1 o'clock Pacific time, 4 o'clock Eastern. Let's see, stock screening for cash secured puts. We're going to talk about all of that. So let's start with, I think so. Yeah. So let's start with MicroStrategy. MicroStrategy had a high of 456 just a few months ago, back in July, and it has come down significantly to 155. So typically, stocks like this do have volatility. So that is to be expected. You're going to have some ups, you're going to have some downs. Over the long term, good quality stocks go up, right? It's my view. Now, I'm not here to recommend any specific ticker to anybody. Your money is your money. You got to take like responsibility for your own actions. My role in these live streams and my channel in general is to help educate people and to walk through, you know, scenarios, education, strategies, that kind of thing. I personally have traded MicroStrategy for a significant amount of time, and I believe that it will come back up. It's down for a few different reasons. First of all, Bitcoin is down. You know, one of the things that I look at is I just look at BTC price USD, right? So where's Bitcoin been? So this is a 1 day chart. So you'll see just in a day how it's come down. We can look at 5 days. These are just easy tools that I use on the fly when I'm looking at a ticker, when I'm kind of evaluating my positions, when I'm looking at maybe adding new positions or that sort of thing. We can see 5 days, we can see 1 month, you know, etc. If I look at Bitcoin as a whole, so this is maximum chart since it had started back in whenever that was, 2016, we see the bumps, right? We see like flatness, up significantly. You know, it was up to, this was way back when it was trading at $8,000 a coin and went down to, or 59,000 rather. So 60,000 cut in half down to 30,000 in a short period of time. But what happens? It goes back up, it goes back down again, and then it kind of runs up. So that is typical, not just of Bitcoin, but any stock. So if we look at, let's say, I don't know, like a Google. Let's look at Google. Let's take a look. Here is a chart of Google, and I can change the time frame, by the way, by clicking on the D, right? So this is a 1 year, 1 day chart, and it just shows, each day over the past 1 year. But we can see maximum. I can go into customize and let's see, add a time frame. I want to look at daily, and I want to look at max available, just as an example. So these are things that you can adjust, not just with Thinkorswim, but with any trading platform that you have. Generally, you can adjust these, right? So if I look at the maximum, Google is similar, right? So it goes down. This was early on. It goes down significantly. Then it goes up. Then it goes down. That's what stocks do. That's what good stocks do. And now it's kind of run up pretty significantly since this right here has been April. So somebody had said, let's look at IBIT, and we had IBIT from a couple weeks ago. Do you remember? If I look at my monitor page, these are the shares that we had practiced on from a couple of weeks ago. So having 200 shares at an average price of $54. Let's look at IBIT. Now, IBIT is down to $48, right? So it's come down significantly. Now, what do we do when we're trading a good quality ticker and it comes down? There's two options, right? Or actually three options. We can freak out, right, and sell our shares. And if we do that, and if it came down since we purchased it, we just took a paper loss and turned it into a real loss. I really want to make sure you guys understand the major difference between a paper loss and paper gain and a real loss and a real gain, right? So that is a big distinction that you want to understand. So if I look at my net liquidity, so this is my practice account that we had been using from a couple of weeks ago. If I look at my net liquidity, and it might be called something different if you're with a different broker-dealer, basically that is the amount of money that you're like, if I liquidated all my positions, how much money would I have, right? And that number is going to go up and down based on what the investments are doing, going up and down. But that is a paper gain and a paper loss, and it's not a real gain or a real loss. So I want you guys to understand that. Now, that's relevant in the sense that, okay, if an emergency happened in my life and I needed to access some of my capital, that's relevant, right? Because now I have to sell shares of something or liquidate positions and perhaps turn that paper loss into a real loss, right? Or let's say I'm using margin and I was overextended and I didn't anticipate such significant downturns over short periods of time. If you're leveraged too much using margin and you have to liquidate a position, that as well is very similar. It will turn a paper loss into a real loss. But other than that, it's not relevant. What I care about is the income that I get, that I put into my pocket, and that's what I live on, right? That's what I spend, that's what I enjoy, and that's why I typically, personally, stick with weekly trades, because I want to create weekly income. And also, I don't know where the market's going to go, right? So somebody asked me this morning, well, what do you think about MicroStrategy? Do you think it's going to go to 100? I have no idea. Listen, guys, anybody that you're listening to, whether it be me or somebody else on YouTube or on the news or on wherever, the fact is nobody knows where anything's going to go. Maybe some people know, but those aren't people that you're ever going to hear speak. So that's important to keep that in mind. Now, what I said a moment ago was, okay, there's three options when something goes down. You can freak out and you can sell your shares, liquidate your positions, and then take a real loss, right? Or you can freeze and not do anything, like let me do nothing, right? And a lot of people do that, right? So they don't think about what might come, in the future. They don't think about possible market movement, and then they don't know what to do, so they freeze. And then the third option is to buy more as it goes down. Now, I'm a big believer in Bitcoin. Somebody, I didn't respond to this comment yet earlier, but somebody commented on my channel here. Let's see, I'll show you guys. It was something about Bitcoin. Oh, I guess I can't, like I said, I'm not very tech savvy. So let's scratch that. But the comment was something about like, why do you think Bitcoin's going to go up? Are there earnings? Are there dividends? Whatever. You know why I think Bitcoin's going to go up? Because it will never go bankrupt. It's too big. We've heard too big to fail back in 2008. So I don't want to ring that line into your ears, too big to fail. And then Lehman Brothers failed, right? But it's too big to fail in the sense that Bitcoin will never go away. Listen, countries are using Bitcoin. Our government is using Bitcoin. There's only 21 million Bitcoin ever. So it has what we call a finite supply. It's not like US dollars where the government can go print new dollars, right? And just infuse more cash into the economy. No, Bitcoin's very different. Bitcoin's like the one thing you can stick it on a thumb drive and you can go somewhere. It will never go to zero. Listen, there's no guarantees and there's no risk-free. But if in my view, and you can, like I said a moment ago, it's your money, you do what you want. But in my view, it's probably one of the safest asset classes out there. So when it comes to option number 3, buy more if it goes down, that's what I do. I trade things that I really believe in, that I know long-term will go up. And worst case scenario, I will have some paper fluctuation, and I don't so much care about that because I don't anticipate to have to access any of those funds. So that said, what we're going to do now, IBIT is down 5% today. When is the best time to sell a put? When the stock is down. That is the best time because you're getting more premium. And let's look at that. So we have 200 shares right now at 54.75, and right now it's at 48.50. What we're going to do is sell another put. What date am I going to use? That's the easy one, right? I'm just going to use this Friday. Listen, options trading, there's 2 strategies: sell a put, sell a covered call. You have to know, like, okay, what strike price do you want to trade? How much do you want to pay for the ticker, the stock? If it drops to that price, what price are you comfortable with? Expiration date is the other part. There's not a lot of moving pieces. And what I'm trying to say is this: there's a little bit of a learning curve to learn the 2 strategies. And then after that, literally, it's like spending 15 minutes a day. What other like gig, I guess, or job or whatever, can you spend 15 minutes a day and produce yourself income on a regular basis? There's nothing, to my knowledge. You can let me know in the chat if you think there is, but to my knowledge, there's nothing. Real estate is kind of cool, and I've had real estate in the past, Airbnbs and that kind of thing, but that comes with work, right? So you have to manage employees, you have to manage customers. Sometimes you have to be somewhere. So options trading, you don't have to be anywhere. You can, like right now I'm in Los Angeles at my daughter's apartment, and in a few days' time, I'm going to be back in New York, and I could just bring my laptop with me. So that's that. So I'm going to look at this Friday, which is December 5th. And let's talk about how we choose strikes. And I'm going to get to the questions as well. And we're going to go over a little bit because I want to make sure that you guys get the content that you came here for. I'm a big believer in delivering what you guys came here for. So the strikes are down the middle, right? So the strike price is the price at which you're going to pay if the stock drops below that price before the contract expires. Now, the closer we go to where the stock is trading, so the stock right now is trading at 48.42. The closer we go to that number, you'll see by the last column here, this is the last trade, how much money you would get in premium. The closer you go to the stock price, the more money you're going to make, right? Because there's more risk in the sense that you're more likely to have to buy those shares, right? I always, 100% of the time, calculate my rate of return before I make a trade because I want to make sure it makes sense mathematically. Listen, it's like if I go somewhere in my car, I'm going to pull up the address on Waze, and then I'm going to follow the screen. This is kind of the same thing. It's just using tools to make sure you get to where you want to go. Like, I don't want to put a trade in and make, let's say, 10% annualized rate of return. I don't want to do that. If you guys are trading, let's say, SPY as an example, everybody always talks about SPY and how safe it is. It's like $600 per share. Let me just pull that up real quick so we can look at it while I'm talking. Let's see. SPY. Yeah, $680 per share. If you guys think that that's safe, I mean, you can go with that. The reason why it's not safe is because it's mad expensive. I mean, if you guys have $10 million for an account or something and you don't care about, cash flow or how much cash or what your account does on a regular basis, then maybe it's a good thing. But absent that, you don't want to be trading a stock that's $680 and the rate of return is super, super low. Let's just walk through that. I'm gonna compare IBIT to SPY, and I'm just gonna illustrate to you guys on the screen, right? So let's go back to IBIT as an example. And let's say I want to look at something that's kind of far away from where it's trading now. Let's say a 46.50 put. So right now the stock is at 48.39. This is a 27 delta. There's not a lot of things on the screen that I look at. It's not a lot of work. It's a little bit to learn the two basic strategies, and then it's kind of like experience as you go and getting more familiar with different strategies and these concepts that we're talking about. So I look at delta. That's like, okay, how likely, percentage-wise, is it that the stock is going to go from where it is now below the strike price before it expires? So I'm going to go kind of far out usually, generally speaking. Sometimes I go a little bit closer if I really want to buy the stock, but absent that, I go a little bit far out. Let's look at a 27 delta. I'm going to make $55, and let's calculate that. Is that a good deal or is it not a good deal? I don't know. Let's see. Let's just use a plain old calculator. $55, and I'm going to put up 46.50, right? Because we're looking at the 46.50 strike. So that's how much money I have to put the trade in if I'm not using margin, right? If I'm using all my own money. I'm making 1.1% for the week. Okay, if I multiply that times 52, my annualized rate of return is 61%, pretty good. So now let's compare that to the same type of a trade on SPY as an example. And worst case scenario, I'm buying 100 shares at $46.50, right? If it goes bankrupt, which I don't believe it ever would, but if it did, I would lose $4,650, right? 27 delta. Now let's compare that to SPY. So many people think that that's an amazing stock and it's super, super safe, but that's because people that think that, they're just brainwashed by Wall Street to think that. They don't know any better, right? So let's look at December 5 for SPY, and let's look at a similar type of trade, a 27 delta. Okay, you're making a lot more money, right? So we're not going to find the exact delta, but we're going to find something close, 26. That last traded at $175. Now you guys might say, oh my gosh, that's so much more than like $60 or $50. Yeah, but you're putting in a lot more money, right? This is a $674 strike price. If you had to, you're buying 100 shares at $674. That's 67 grand on one trade, right? Again, if you don't have 10 million bucks in an account, which you probably wouldn't be watching me on YouTube if you had 10 million bucks in an account, right? That's the funny part. Then that might not matter as much. But let's take a look at the rate of return. This is why you guys want to calculate your rate of return. So let's see, 175 divided by 67.4. 175 divided by 67,400. Well, now you're making 0.2%. If we multiply that by 52, which is exactly what we did with IBIT, I'm making 13% on my money. Listen, I'm not here to make 13%. Do you guys see why that's not a good trade? Let me take a look. I got a bunch of comments and I can only look at one screen at a time. And like I said before, I'm not super tech savvy. At some point, I'm going to go to New York, back to New York next week. I think this week, I'm not sure. You know, the great thing about options is kind of like I'm going with the flow. I'm going to stay in LA a little bit and I'm going to go back to New York. And when I'm back in New York, I'm going to shave out some time to, because I do have lots of devices. I have an iPad and a laptop and phones and stuff. And I want to be able to see different things and make it easier for me to see your comments. So stay tuned for that. Let's take a look and see what questions. Now, somebody said they can't hear me, but I assume that you can hear me, right? Okay, so Nina said she can hear me. She's on her laptop in her bedroom. And yes, please re-like the stream. I have to say, I'm going to take a moment. I appreciate, there's a few of you that are very consistent with likes and comments and things like that, sharing perhaps videos. I appreciate that. So I want to say thank you. I appreciate that I can help you, and I appreciate you being kind in the fact that telling people to like the stream. Thank you for that. Let's see. Let's look at TQQQ because somebody asked about TQQQ, and that's kind of an interesting one. So TQQQ, let's just take a moment and look at that together, right? First thing I'm going to do is look up TQQ stock, right? TQQ stock, and I'm just going to see what it is. That's the ProShares Ultra Pro QQQ. oftentimes when I'm looking at a ticker, here's what I do. I Google it, right? Google is an amazing thing. What did we do before Google? Like 20 years ago? I don't even remember. So you're going to look and you're going to click on it, right? So I'm going to look at the ProShares link and I'm going to see what it is. So it's the 3x daily return. Now, this is what we call a leveraged ETF. So there are a lot of leveraged ETFs and they've become quite popular lately for a couple reasons. Number one, if I compare, let me just pull up QQQ as well. So it's based on QQQ, which is $616 a share. But TQQQ is only $53 per share. So a lot of people have come to the marketplace as of late to create these products to fill a need in the marketplace, right? So sometimes people want to trade QQQ. What does that have in it? Well, here's how we tell what's in something. Usually what I look at is the fund fact sheet. That's going to tell you what the holdings are. So let's just download that, right? And let's pull that up in Adobe here. And that will tell you a lot of information, and a lot of this stuff can be overwhelming if you dive too deep, right? Analysis paralysis, sometimes we talk about. But I just want to look at the important stuff. What's in it? So you're going to look at the top holdings, right? So the top holdings are NVIDIA, Microsoft, Apple, Broadcom, all the big players in the tech space, right? So instead of going to the marketplace, let's say, and trading NVIDIA or trading Tesla or trading Amazon, you can trade it via this particular ticker. Now, because this is a leveraged ETF though, it doesn't really have real stuff in it like QQQ would. So QQQ would have like, X shares of NVIDIA, X shares of Microsoft, and there's people that are buying and selling. They're called fund managers that actively manage that fund, right? Sometimes not so active because they're just trying to peg a benchmark. But leveraged ETFs work a little bit differently. And I had this conversation this morning with someone about leveraged ETFs, and they don't actually have the stuff inside. So what that means is there's a little bit more risk. And there's a little bit more risk for a couple of reasons. Number one, the biggest reason for the additional risk is because people that are managing this particular fund, TQQQ, they're using a lot of like derivatives and swaps and like not publicly traded things to hit a 3x return on a daily basis of QQQ. So it's kind of like they're using these like made up things to try to create this thing. So it's not as transparent as just going to the marketplace and trading NVIDIA. If you have the money, depending on how much money you have in your account, if you have, let's say, 100 grand or something like that, you're better off just trading the underlying because there's more transparency and it's a lot safer, and you can still make money, right? But if you don't have enough money, oftentimes you can use these derivative products, these products like TQQ, because it's a lot cheaper. But you don't want to use it these aren't products that you buy and hold for the long term, number one. So most of you viewers on my channel here are not buy and hold people, I hope anyway. Why? Because buy and hold sucks, right? It's paper gains that you can't spend. But you can use an investment like this to trade it short term via options. So let's look at that. So it's $54.09 per share, right? And strikes are down the middle, puts are on the right, calls are on the left, and you want to go short term. So I like 1 week. So look at 1 week. I did a video on YouTube the other day, maybe yesterday or the day before, I can't recall. But it was, I think it was using a 1 month strategy. That's okay too, but I prefer typically 1 week. Look at the volatility on these. Super high volatility. As we go closer to where the stock is trading, of course, you're going to make more money, right? So you're going to make more money than if we look at something that's a little bit further away. Let's look at something that's super conservative. Let's say a 14 delta, right? So it's pretty far away. Right now it's trading at $54. But this particular, let's look at like a $50 strike. I'm just saying like these are the steps that I use to walk through kind of like what I'm looking at, right? So it's trading at 26 bucks. So let's see, is that a good deal? $26 divided by 5,000 bucks. I'm making 0.5% on my money for the week, right? I'm making 27%, not bad. Depends on our goals, right? So it depends on a few things, how much risk you want to take, how okay you are with having to buy the shares if it comes down, and how much money you want to make as well on an ongoing basis. If we go a little bit closer, let's say we're okay with buying those shares. And typically when I'm trading, when I'm selling a put on something, I'm okay to buy the shares, because if I have to buy those shares, I'm going to turn right back around and I'm going to sell a covered call on it. What strike price do I use when I sell a covered call? Right over what I paid for it, or right at what I paid for it. Why? Because I don't care about the share appreciation. I just want to make income. Listen, the only reason why I trade options is I just want to make cash in my pocket on a regular basis to sustain my lifestyle. It's literally that simple. Let's look at something closer. Let's look at something. Okay, I'm starting a new account and I don't have any investments yet, and I'm okay buying this particular ticker if I was to get assigned. Let's say I wanted to go a little closer. Maybe I would do a $54 put. That last traded at 122, right? Now, if we do 122 divided by 5,400, well, now our rate of return is much higher, right? 2% for the week. If I did a trade like this every week, I'm making over 100% on my money. So you have to find what feels right for you. A lot of these things, there's no right or wrong answer. It's like, okay, you want to sleep at night. When you're out with your friends or family, you want to be able to not have to check your phone 8 million times. You want to just kind of like, I don't want to say set it and forget it, but kinda, you want to just spend 15 minutes a day. You want to use trading as a tool to help you live an amazing lifestyle. Anyway, that's my view. I don't know if you guys have a different thought process. Let me look at some of the other comments here and let me know some questions as we go. Let's see. Can we look at stock screening for cash secured puts? I don't use stock screening, actually. I use Google a lot. And then in preparation of today's session, what I did was, actually, I don't have it on this. This is like a different account. I made a list of stuff that I was looking at to talk about today. But because this is a different platform, I don't have it on here. Yeah, anyway, it's not there. So I don't use stock screeners. I can't help you there. But there are some good ones. I think somebody said last week, like FinViz or something like that is a popular one. Some of them have paid programs. Some of them are free. What I do is I've been trading the same tickers over and over again. And then sometimes people mention something and I look it up and I see if that's something that's of interest. But generally, I just stick with the same tickers over and over and over again. Let's see. I would like to see how you trade MicroStrategy. I know it's not the best day for the covered call. So let's take a look at MicroStrategy. So you're right. So when a stock is down, so right now this particular stock, I usually look at the percent change. I don't ever look at the dollar change, by the way. I look at percents, and I never look at things in dollar values in general. I look at percents because that gives you just a better understanding. Since it's down 4%, almost 5%, that means puts are more expensive, right? And calls are cheaper. Now, if you want to sell a covered call, you can do that a couple of ways. So let's talk about that for a minute, because I know that this is going to apply to a lot of people watching this stream. You might have 100 shares, but you also might have 200 or 300 or whatever number of shares. And you're going to own them at different prices, right? So you might have bought 100 shares at $200. Maybe you bought another 100 shares as it came down a little bit at $190 or whatever that scenario is. When you sell covered calls, you can do that one of two different ways, right? You can either sell multiple contracts on the average price. So in other words, if you bought 100 shares at, let's say, $200, and then you bought 100 shares at $190, and then you bought 100 shares at $180, you would actually own 300 shares at $190, right? Because it's kind of in the middle. I'm using easy numbers that you can think of easily mathematically without a calculator. But I can show you guys also how to calculate that. Let's say you own 100 shares at $200 and 100 shares at $190 and 100 shares at $180. You're going to add them together and you're going to divide by 3, and you're going to have 300 shares at $190. So you can sell 3 contracts at $190. You can do that. Now, if you do that, you kind of should stay out of that ticker for 30 days. We're not going to go too deep into the weeds, but the reason for that is you're going to have a wash sale. I have other videos on that, and let me know in the comments if you want to talk more about that. But just keep in mind, what I want to give is enough information on these sessions to help as many people as possible. And I don't want anybody to get confused with or bogged down with details, right? So if you sell 3 contracts at your average basis, you're not going to want to trade that ticker for another 30 days. But you could do that. Or here's another idea. You can trade 1 contract at your 180, right? Your 180 basis. Maybe 1 contract at 190. Now that might not make sense because it might not pay enough money or a lot of money. You have to decide that. If you trade that way and you trade 1 for this 100 lot and 1 contract for this other 100 lot, you're going to want to manually assign those. So you do have like a default setting in your account that might be called like first in, first out, or last in, first out, that kind of thing. Regardless of your default settings, you can always call the broker-dealer on Monday after, if you were to get assigned those shares, call them on Monday and say, hey, I had that 190 call that got assigned Friday, and I want to tag those to the 100 shares that I bought on, I don't know, whatever, November 2nd, and the basis was 189.42 or whatever the number is. So you have typically 1 day to do that. You'll have Monday to do that. So keep that in mind. So that's how I would structure that. Typically, sometimes people ask me, well, what do you do, Michelle? Do you do the average cost, or do you do like 1 for this, 1 for that? I've done both before. So it depends on how many shares I have, depends on how much I want to exit that ticker. So that's a consideration. Usually I do 1 share for each specific lot, right? So that's, but you have to find what's most comfortable for you. Let's see. I'm going to go through some more questions here. So some people posted some comments about the account privacy. I appreciate the help with that. I'm going to figure that out after. And next Monday, I'll use this other real account after I figure out how to do that. What are your thoughts? Oh, this is a good one. Oh my gosh, this is a really good one. What are your thoughts on RZLT? So somebody else, I don't think you're the person because it's not the same address. Somebody else had asked me about this ticker, and I hadn't ever heard of it, RZLT. And then I started looking it up, and it was super interesting to me. And I plan on making a video. I just haven't done it yet. Listen, the videos that I put on YouTube take me a long time to do. I'm trying to be better every day. First of all, number 1, I'm putting up a video every day for 1,000 days. That's my commitment. And I think yesterday was day like 146 or something. That gets to be challenging. I'm not going to lie. And I spend a lot of time doing that. I spend time thinking about what I want to talk about. I spend time setting up the video, figuring out the audio. I spend time editing it afterward. My daughter helps with a lot of that stuff, but I don't have a team. I don't make money from all this stuff. Listen, I'm just here because I want to help people. And I don't have a team to do that stuff for me. But this is a video that I will be doing over the next few days because it was super interesting to me. This is like a biotech type company or something, healthcare type whatever. And I haven't traded any of this type of asset class in a while. And it was interesting for a couple reasons. Number 1, it's pretty slow and steady, right? So if we look at the chart, this is a 1-year chart. It's kind of like, okay, it's sideways, it goes down, it goes up. It was interesting because it's only $9. I have tons of people asking me on my YouTube channel, I have a smaller account, they say, help me, figure out what to trade. And then when you look at the options for it, well, first thing, there's not weekly options, there's only monthly. And that's because it's not as popularly traded as, let's say, other tickers, but that's okay. It doesn't make it bad. When I look at the options, check this out. Oh my gosh, this is amazing. And thank you for the question. And by the way, whoever this person is, fund ride. I think you're one of them who comments a lot on my YouTube. So thank you for that. That's most appreciated. When you look at the options, you see, okay, it's a $9 stock. And if I go to a $7.50 strike price, there's only a 25 delta. Now, delta is like there's a technical, I use it as a cheat sheet way to determine the likelihood that the stock is going to go from here to here, right, before the contract expires. But the technical delta it's a mathematical formula, and it's like the rate of change, right? That has to do with the option contract and the stock. I don't want to get too detailed because it's kind of boring, and I don't want to talk over anybody's head. I'm always trying to talk to you like I'd be talking to, I don't know, a 10th grader, and I want to make it as easy as possible. But when I look at the delta, right, 25, and I look at the price. Holy cow, it last traded at 170. In fact, the bid is 170. So if I wanted to sell this and put an order in, it would automatically fill at $170. And what's my implied volatility? Oh my gosh, it's almost 400%. But when I look at the chart, it looks like it's kind of slow and steady. So that's kind of like those are contradictory to me, right? So that's why this is super interesting. And if I look at my rate of return, if I'm making 170, and by the way, maybe you might get a better fill, meaning if it's 170 bid and 220 ask, typically if you put a limit order in a little bit lower than the mid price, usually you fill. This is kind of a wide bid spread, so that might not be the case. But if you put in an order at 170, it would fill automatically. And if I'm making 170, and I'm putting up $750, literally only $750. Worst case scenario, if this company goes bankrupt, you'd lose $750, right? How much money are we making? Oh my gosh, we're making 22% on our money for about a month's time. I don't know, today is December 1st. This is a December 19th contract. I'm not gonna get too mathematical, so I'm just gonna multiply by 12, assuming this is like a 1 month thing. I'm making 272% on my money. What if I did a $5 put? Holy cow, let's just take a look. A $5 put has a 13 delta. But with stocks like this, I would encourage you guys, a lot of times we have rules and kind of like rules of thumb sort of thing. But sometimes things do deviate from that. So I don't know a lot about this company because I haven't done a whole lot of research on it. I think it's like hinging on one sort of like, I don't know, a magic drug or something like that. Like they have trials. So it's got some risk in the sense that if that one drug doesn't go through, this company can go bankrupt. So the likelihood might not be heavy, let's say, but if that happens, this could just go away. But let's take a look at a $5. I don't know. This can make sense for a lot of people. Again, I'm not recommending this to anybody because it's your money. You got to do your own due diligence. But if I'm making 95 bucks and I'm literally putting up $500 and I'm making 95 bucks for the month, right? If I did a trade like that all the time, I'm making 200% on my money. And it would have to come down from $9 where it is all the way down to $5 for me to have to buy those shares. I don't know. This could be kind of cool. I was going to buy it in this paper trading account. Actually, I could do that. But I'm going to show you the real account next week. But I'm going to put the trade in anyway. This is how, let me just go slower. This is how I would do it. Let me just delete this and I'm going to show you all the steps. So in order to put a trade in, what you do is this. You click on the bid and it automatically brings up this sell order entry box, right? So you just want to double check it. Selling 1 RZLT, December 19th, $5 strike price. It's a put. The price, you always want to use a limit price, right? When you put an order in, don't ever trade at the market. You just don't want to do that. You want to use a limit price. And if I put a price in at the bid, it will automatically fill. I don't know if that's the case on a paper trade. And it's probably not the case on a paper trade, but this is how you would do it, right? That's a really good question. And stay tuned for the video. I'm going to look at, oh, now it filled. I'm going to look at that in more detail, and I'm going to put a YouTube video on that over the next few days. Let's see. Thank you so much. I've made $120 in the last, in the first 2 weeks after watching a few of your videos. I sold one AMDL at 15 for $37 this morning. It's so simple. Haha. Thank you. You know what? That makes my heart happy. I love hearing that kind of stuff. And I appreciate you sharing that. like you weren't trading before, but you watched some of my videos. And that's why I'm here, guys, because I want more people like that. Listen, there are way too many people that are living lifestyles and lives that they don't enjoy. It's interesting. I used to date a guy this a long time ago, and we're not dating anymore. But his one time we had this like deep conversation about what do you want in life, right? And we talked about that. And what I want in my life, I'm going to share that with you guys. And he thought about it in an opposite way, and we weren't compatible for a lot of reasons. And this is kind of one of them. But what I want in my life is I want to be happy. Man, I think life is short and life is beautiful. And I don't want to ever be doing something that I don't want to be doing. I'm a gym person, although I haven't been to the gym in the past few weeks because I've been kind of busy with other things. But typically speaking, over the past, 5 years, 7 years or so, I like to go to the gym every morning. First of all, I like habits, right? I think habits are healthy. And I don't only go to the gym because I want to, have good weight, but I want to think clearly. I want to feel healthy. Like it's got a lot of those benefits with, dopamine and serotonin and all that stuff. And anyway, the point I was trying to make was this. A guy that I used to train with at the gym, his name is Martin. He used to say this a long time ago. If it's not I'm not going to swear on this channel because it messes up my ad revenue. If it's not a heck yeah, it's a no. So that was his thought. And that's what I live my life by. If it's not a heck yeah, it's a no. My intention is I want to be happy. When I teach people, first of all, I love talking about options because I find it interesting and amazing, and I've been doing it so long. I started trading options in 1997, so a super long time ago. And I love it. I love money. I love making money. I love spending money with the people that are important to me. And I like to do things on my own schedule. And options does that. So anyway, my point was this. There's too many people living lives that they don't enjoy. They get up every morning, they go to a job that they don't like, they come back home to a spouse that they don't like or something like that, and they're consistently doing things that they don't want to do. And life doesn't have to be that way. So that's why I'm so passionate about options. Like literally something like this can help you create. Money is so important. Some people say money doesn't make the world go round, money doesn't make you happy. Like there's all these like sayings, like these like cliches, right? You might say that people talk about. But the fact is that money gives you options. Try doing what you want to do without any money. It's kind of hard to do that. And so money is important. So that said, options can help you create the lifestyle that you're looking for. Anyway, that was my thoughts on that. So congrats, Bo Coolness. Congrats to making $120. That's amazing. And that was on AMDL. I'm not sure what that ticker is. Let's just take a look at it briefly. AMDL. And what is that? Actually, let me just Google it. AMDL stock. Granite shares 2x long AMD. So AMD is a great stock. AMD and NVIDIA, those are powerhouse companies. So for people that can't trade or maybe don't want to trade, right? AMD, let's see how much AMD is. It's significantly higher than AMDL. So AMD is $219, but AMDL is only $16. So it gives you the advantage of trading something that you ordinarily wouldn't be able to trade because you don't have enough cash or you don't want to use that much cash, that kind of thing. So bravo for that. And I'm happy that I can inspire you to do that. Let's see. So William says, I love AMDL. It pays me every week. I'm going to have to check that one out. I haven't done that. And historically, I don't trade a lot of leveraged ETFs. And really, like, my main reason for not trading a lot of leveraged ETFs is because it's not actual stuff that I can see and understand inside of that investment. Like I said, leveraged ETFs, there's these people that, trade derivatives and swaps and these non-publicly traded things that try to target and hit that 2x or 3x return on a daily basis. So it's just a little bit more gray than what I like, but they are very interesting. You're welcome for looking at the TQQQ, no worries. SoFi puts pay similar to TQQ for half the money. I've traded SoFi before. I had never heard of it before somebody mentioned it not long ago on my channel, and then I did a video or two on them. $29 a share. So let's look at a chart. So here's a 1-year chart. And yeah, I mean, these inexpensive tickers can be super interesting. And also, I haven't really talked about, I don't talk about margin a lot because sometimes people misunderstand margin, and margin can super get you into trouble, because if you're using margin, I would say 99.9% of the people that use margin, me included in the past, have not used it responsibly, because you don't mathematically check, right, how far your underlyings can fall before you might see a margin call. But let's take a look at margin, because I do want to talk about it a little bit, because it's interesting, and margin is using other people's money. And it gives you more of a return, and it's particularly helpful for people that might have smaller accounts. So this SoFi right now is $29.05 per share, right? So let's say if I went down a little bit, let's say a $27 put, right? It pays $18, and I'm putting up $2,700, right? Let's take a look and see if that's a good trade. Now, I encourage you. Sometimes people say $18, what's that? Okay, but you're only putting up $2,700, right? So $18 divided by 2,700, you want to pay attention to the percentage, not the dollar, right? So that's about 0.6%. If you did that every week, you're making 34% on your money. Now, sometimes people have said on my channel, if you do that every week, what if you can't do that, blah, blah, blah. Every one of these videos, I'm showing you guys how you can make 20, 30, 40, 50, 100% rate of return. There are no shortage of opportunities to make that kind of money. Oh, that bell was the market closing. So yeah, so SoFi can pay you more money, and look at the implied volatility. So the reason why you make so much on SoFi is the implied volatility is super high. I had this conversation with somebody else earlier this morning about volatility, and a lot of times people misunderstand volatility and they think it's risky, right? So volatility for me means that, okay, if first of all, number one, I'm going to make more money, right? Because the option premiums are fatter, right? Because typically I'm taking more risk. But the reason why I don't look at it from a risk standpoint is volatility means it goes up a lot and it goes down a lot. If it goes down and I have to buy the shares, I know it goes up a lot also. So I can sell a covered call and get rid of those shares. So I like volatile investments. Let's see what other questions we have. Can you do the NP math for KSS 2450 put? What is the percent? Let's walk through that. And by the way, I recognize your comment, and you had asked a few weeks ago if I was able to add more people to the last event that I did. And I didn't answer that because there was no, I think you posted that on my channel, but there wasn't an area for me to reply to that. So if any of you guys want to like ask me a question or something, if you put it in a video, I can reply to a video, or if you email me, I can reply to that. But the way you asked me that question, I wasn't able to do that. So I just wanted to let you know I wasn't ignoring the question. But let's take a look and see NP math for KSS. Let's look through that. KSS, I don't know what that ticker is. I never heard of it, but let's look at it. So first, I just want to see what it is, right? So what am I going to do? I'm going to go to KSS stock, and I'm just going to see what Google says. Oh, Kohl's. So that's Kohl's. Okay. I don't particularly like retail companies. I don't think I've ever really traded retail companies. Maybe once or twice in the past. Let's see what specific contract. 2450 put. So right now, so 2450 put would be in the money, right? Because right now it's trading at 2413. So I personally would never sell a put that's already in the money. I can look at it for you if you'd like. It's trading at, it last traded at $94, right? And the way that you would walk through that math is this. You would just divide your premium into the capital that you're putting up, which would be $24.50 in this case, because it's a $24.50 contract times 100 shares. And that gives you your rate of return of this, right? And then you multiply by 52 because this is for 1 week. So that's how you would calculate that. Almost 200% on your money, but it's in the money. So I wouldn't make that trade. I think, especially when you guys are new, I would go like lower on the delta. Like you won't make as much money, but it's less likely that you're going to have to buy the shares. Trading, it's so easy to make money, and it's harder not to lose it. And I always err more on the conservative side and being cautious than being aggressive. My 2 cents for whatever it's worth. Let's see. Bar Chart and FinViz were the 2 stock screeners that we mentioned last week. So thank you. And I want to give a thank you and a shout out to you guys who are sometimes answering other people's questions, both on this live stream as well as my YouTube videos. I really appreciate that. Listen, we live in an abundant, beautiful world. Sometimes people are living in scarcity and they're going through perhaps some personal things that maybe nobody even knows about. And when we go through personal things, sometimes it can be easy to not be kind, right? Or to think like screw them, I don't want to help them. I just care about me. But it's a beautiful world when everybody like doesn't look at things like that, looks at it from an abundant perspective. A couple people have put on my YouTube channel recently, and actually I get this every so often. Why are you telling people about options? Then there's not going to be any buyers for the sellers. Listen, options have been around a really long time. I don't think my YouTube channel with 4,000, subscribers or whatever, 100 people on this live stream is going to break the market. And I think the world is more beautiful and more people are happy. Yeah, I don't mean to be corny, but I do like to talk about that kind of stuff sometimes. I'm a huge motivation. Thank you for that. Listen, I want to inspire you guys. Even when I talk about stuff, sometimes I feel like I might be bragging. I don't know. I did a short video the other day with my car. Got so many views. I think it had 2,500 views in the first day or something, because some people are attracted to that kind of thing. And sometimes I feel like I'm bragging, but I don't mean it in a braggy way. I mean it in an inspirational way. Listen, if I could do it, you could do it. There's nothing that makes me more special than you. I promise you. I don't care if maybe you didn't graduate high school, or maybe you're not even in the US. Maybe you're in, I don't know, I don't want to say third world country. That's not politically correct anymore. Developing. Maybe you're in a developing country. It's a little bit harder, right? Sometimes given the lifestyle or the life you were born into. But I'm not any more special or any more different than you are. And if I can do it, you can do it. So that's really a lot of the purpose that I have on these sessions. Do you use other strategies apart from cash secured puts and covered calls? No. I use margin, although margin, to share a little bit about myself, I was heavy in MicroStrategy. And I definitely, if we're looking at MicroStrategy, where is it? Let me sort by symbol. And, let me just sort again. I don't know. Let me just pull it up like this. See, I'm not very tech savvy. If I'm looking at MicroStrategy, I was buying. Last year, I literally made, I think, $263,000 on MicroStrategy. And I looked that up recently. And this year, I wouldn't be embarrassed to tell you how much I've lost in MicroStrategy, because I was using margin and I definitely did not anticipate this kind of drop. So margin can get you into trouble, when you're overextended. So I personally have sold a lot of not necessarily cash secured puts, but puts using margin, as well as covered calls. The only other strategies I have on occasion traded credit spreads. I find them to be kind of a pain in the neck to do. Credit spread is it's good for high dollar tickers, right? Tickers that are expensive that maybe you can't trade in your account. And you would sell a put and buy another one underneath, and then sell a call and buy another one above, and it limits your risk, but they're kind of a lot to manage. I generally like to stick with easy things, because I don't want to be looking at charts all day. I don't want to be tied to my phone when I'm doing cool stuff, and I want to be able to sleep at night. So I don't really do that kind of stuff. So yeah, I just stick with puts and calls. Love hearing your examples, and calculating rate of return has been a game changer. Listen, so many people do not calculate the rate of return, and I think that is the biggest miss that people have. So yeah, you definitely want to do that. I don't generally do that when I sell a covered call, by the way. So if I'm selling a covered call, I don't really care what the return is as long as it's pretty decent. I have the shares and I want to make some income off those shares. So it doesn't really matter what the rate of return is, and it doesn't matter what the delta is. But for puts, for sure, you want to do that. Let's see. I don't usually, so somebody mentioned about upcoming dividends. I don't trade a lot of stuff that has dividends, but dividends will affect the option price. So that's something that you want to keep in mind. So you'd want to, maybe, I'm not super knowledgeable about that because I don't really trade like that, but you can look that up. Maybe I'll do a video on that. So that's why I was looking at that strike price. Regardless of dividends, I would never sell a put that's in the money. You could, but it's already in the money. So my intention for selling the put is I want to take in income, and I only want to buy the ticker if it goes on sale. And so I'm never going to sell a put with a strike price that's already in the money. Macy's. So I know M is Macy's because I've traded that in the past, and somebody talked about this time of the year. I don't look at like that kind of stuff either. I mean, certainly it might work for you, but sometimes people will say, okay, it's almost Christmas time. Macy's is pretty popular, and they're going to go up. The price is already reflecting all of that stuff, so I never look at that kind of data. I find it just noise in my head. We're going to go a couple more questions, and then we're going to call it because it's 1:09 now, and I know we started a little bit later. My apologies. I'm going to have all my stuff good for next week for sure. Let's see. Thank you for this session. You're quite welcome. Yeah, so I never do Lex Lynn, and I see your comments on YouTube. I thank you for being so active. I appreciate that. I never do a credit spread. I sell puts and calls. I'm with you. You know, you want to make things, listen, the reason why you want to make things easy is because it needs to be repeatable. So options trading is just something that once you learn two easy concepts, you know, strategies, selling a put, selling a covered call, sometimes it's finesse. So as you get more experience, like maybe I want to buy the contract back, sell another put, that kind of thing. Maybe I want to look at some different tickers. But things that are easy are easy to replicate, and they're sustainable. Options trading is not about making money this week or next week or this month or next year even. It's about making money for the whole rest of your life. It's about this. It's about going to work and saying, you know what, like I quit this job because I hate this job anyway, and I'm going to make my own money somewhere else. Or it's about like, hey, I got a regular job and maybe I can't quit it yet because it won't give me enough money, but maybe I want to create some side income to take that vacation that I never took, or to buy that car that I always wanted that I never had, or to put my kid through college, or whatever the case might be for you. That's what options trading is. And that's what inspires me to help inspire you guys. Let's see. Can you share one other ticker you like to trade? You know, historically, my favorites, Tesla has always been my favorite. Like Tesla has probably been my favorite way before even MicroStrategy was my favorite. And it's kind of expensive. I don't know why I can't sort. Oh, here we go. So Tesla is $430 per share. So it's kind of expensive. If you don't have the money to trade Tesla, TSLL is pretty good because that's the leveraged ETF. Now, again, it's got those other considerations that we talked about. So you just want to look it up. So TSLL is a Direxion daily Tesla 2X, right? And it's a lot cheaper, right? So it's, instead of $430 per share, it's $18.49. Let's look at them side by side. So I do this a lot. Let's see. So I'm going to look at Tesla. So you want to just click here, and you could just do it like that, right? So you click the two things, and TSLL. And it takes a little bit of setting up. I don't like candlesticks, so I like to look at bars. And then I also want to look at like, well, this is a 1 year, 1 day. Sometimes when you look at 1 year, 1 day, they deviate from one another. But you want to just see if they kind of move together visually, right? So they kind of do move together. Again, it's not like a buy and hold, but you shouldn't be buying and holding anyway. Let's look at TSLL, right? I think this is a good trade. I was trading this last week. Actually, last week I was running like, I'm always like trying to learn more, and I don't know, I'm just interested in certain things. I was running this thing last week where I did TSLL, and I forget what the short one is. So I did the 2x long and a 1x short, and I went way out of the money, and I wanted to see if it would just give me like I think everything expired worthless. So it was good. But the problem with some of these is liquidity. So some of these aren't actively traded as much. And let's take a look. I'll show you an example. So let's say I wanted to go with, oh, this is pretty actively traded. TSLL is good. So if you compare this one to, like, let's say the AMD 2X or like the NVIDIA 2X or the Amazon 2X, this one is pretty heavily traded. I can add, let me just add, let's see, volume. I'm going to add volume. Oops. Oh my gosh, let's see. I'm going to add volume here, and I'm going to add open interest. I never really talked about this much on my YouTube, but this just kind of shows you, it's good if you're looking at, oh, the open interest didn't take. Let me see. So customize sets, open interest, add. Okay, so volume is kind of like how many contracts are traded now, and open interest is how many contracts are open, right? So people open them and they're still in them and they're not closed. So TSLL is pretty good because it's got a lot of like flow, right? It's, if we look at that compared to, let's see, AMDL as an example, these numbers are a lot lower. So like let's look at an AMDL 13 delta, right? It's still pretty good, 1020. It's not super wide, 200 volume, 691. But if we're comparing it against TSLL, TSLL is quite popular, you might say, right? So there's, you see the volume is pretty heavy and the open interest is pretty heavy. This would be one, if Tesla works, Tesla is going to work better. But if you don't have enough money for Tesla, then TSLL is a pretty good option, right? So a $17 put, okay, it's at $18.50 now, so it'd have to drop another $1.50. The delta on it is 18, right? It's paying 18 bucks, right? So 18 bucks and putting up $1,700. Let's take a look. 18 divided by 1,700. We're making 1% on our money. Making 1% on your money, you're making over 50% per year. Right, so that's maybe a good one. So hope that answers your question. Let's see. Trading takes courage, which comes from practice and repetition. That's exactly right. Can you give us a checklist of things to do before making a trade? So that's a good question. Yeah, there should be a checklist. So I think a good thing is, number one, always just make sure that's a ticker that you wouldn't mind holding for an extended period of time. Always calculate the rate of return. That's super important. Always calculate when earnings is. So let's say you're trading Tesla. When is Tesla next earnings? The reason that you want to know about earnings is because right before earnings, you'll have a lot more volatility. Especially when you're new, maybe you don't want that volatility. So you don't want to trade like let's say today and then earnings is like 2 days from now. Another thing that you might want to check is you might want to check the Edgar page, SEC Edgar. So that's kind of like, all officers, directors, controlling shareholders of publicly traded companies, they have to disclose all of their trades within, I think it's like a 48-hour window. I can't remember. I'd have to look that up again, but it's a very short window, right? So somebody had asked me this morning, how do you see what hedge funds are buying? You can look that up as well, but the data is very dated. So you might not see it for 30 days, 45 days, something like that. This you're going to see within 2 days generally. So you'd see like, I don't know, let's look at Tesla as an example. And you'd look at ownership disclosures here. And there's different form filings based on what the person is reporting. But like, for example, a Form 4 is like, somebody already owns a whole bunch of Tesla and they either buy some more or sell some more and they have to disclose it. So you'd see it here. And the reason why this is important sometimes, especially if you have a heavy position, you want to be as knowledgeable as possible. Like a good example is, I forget the ticker. I think it was, I don't remember. There was like a politician, this was a few years back, that was like insider trading, and he was like the CEO of a company, and he like dumped a whole bunch of stock, and his wife's friends did the same thing, and this was all disclosed. And then what happens is people that aren't paying attention to that, maybe you're trading that ticker, and what happens when a whole bunch of people sell something? It brings the stock price down. So that's a good thing to know. These take a little bit of finesse. I have some videos on this as well. I'm gonna make some applications on this. Actually, I had a really cool Apple iOS app, but I haven't really kept up with it in a while. I'm in the process of doing that again to make it more automated. But if you look at it manually, a Form 4, like I said, they already own a bunch of stock. This is the person. So Kimball Musk, that's Elon's brother, for those of you who may not know. D is disposed. So he sold 14,000 shares on November 10th. So he has to disclose that to the public. Now, sometimes they're as a result of options, like stock options that are affiliated with like directors of the company and that kind of thing. So you really have to, it's more than this video. And then this shows how many shares after they sell, this many shares, how many shares they still have in their account. So that's something that you might want to look at. But there should be a checklist. I'll work on that. That was a really good question, Pete. I just wanted to know about a stock I want to trade, which is going sideways. Is there anything I need to look out for? I haven't traded an option yet. It's okay. virgin to options. It's all good. Sideways is good. So when things are sideways, that's actually the best time, because, you can be selling, puts and not get assigned. You can be selling covered calls and not get assigned, keep the shares, and then sell another call next week on those same shares. So yeah, watch I'm going to have a new event. I don't have any planned yet, but I'm going to plan a new event. And let me know in the comments if you guys find those helpful. Sometimes I do those 2-hour, 3-hour event, walking through puts and calls and going through examples. And then I put the videos up on YouTube usually afterward. You give me hope. Thank you. I still get a little impulsive, but learning. Listen, we all get impulsive sometimes, like greed and fear are kind of interesting emotions, right? So sometimes we get we just see dollar signs, but it's important to really, take a deep breath and make sure you kind of walk through the mathematics and make sure you're trading something that's consistent with the price of your account. I see a couple, and we're going to wrap it up in a minute. See, I could talk all day about options. I really can. A couple of the biggest mistakes that I see other people making, especially new people. Number one, they trade way too many tickers. Listen, you don't need to have 10 tickers in your account. You definitely don't. And if you do have 10 tickers, you're probably doing yourself a disservice, because it's a lot of stuff to manage. And it's better to you could start with one. You don't even have to start with 2, 3, 4, 5. Just start with one. People misunderstand diversification. A lot of times you have 10 things in your account and they all move together anyway. So you think you're diversified and you're not even really diversified. Not really, because if it all goes down, if one goes down, oftentimes they're all going to go down. So you're not getting the safety that you might think that you're getting. HPE and BBWI, I don't know what those are. We're gonna do some of these next week, because I think I went a little long. Monday. So before we wrap up, I want to say a couple things. Number one, thank you for coming. Number two, these videos are on my channel. So if you had to drop off, or if you missed part of it or something, just catch it on the recording. No worries. This is going to be every Monday at 3 o'clock Eastern time, right? I may go online as well, like other times. So you want to be subscribed to my channel, and you want to have notifications on. Because when I use a real account, if I want to make a trade on Wednesday or Thursday or something, I want to do that live because I want to show you guys how I'm doing that. So I want you guys to learn a little bit better by using a real account instead of a paper account. So with that said, I want to thank you guys for your attention. I'm sorry about the beginning technology issues, and Monday we're gonna hit this again at 3 o'clock. Thanks again.